Hello. Today we will start with chapter 1, the accounting equation. What is the accounting equation? The accounting equation is the basic tool of accounting, measuring the resources of the business and the claims to those resources. What does that mean? The basic tool of accounting is the accounting equation. It measures the resources of a business, what the business owns or has control of, which is assets, and the claims to those resources, what the business owes to creditors and to the owners. Creditors means the ones who lend me money. Owners are the investors. Now, the accounting equation is made up of 3 parts: assets, liabilities, and equity, and shows how these 3 parts are related. So, assets are the resources of a business, okay? While liabilities are the debts to my creditors, while equity is the owner's capital. Now, assets appear on the left side of the accounting equation, and liabilities and equity appear on the right side. The formula for the accounting equation is assets equals liabilities plus equity. The accounting equation is an equation, so the left side of the equation always equals the right side of the equation. Assets. An asset is an economic resource that is expected to benefit the business in the future, like cash, merchandise inventory, furniture, land, building, equipment. All of these are assets, okay? So I'm gonna use them in the future and I'm gonna get the benefit from these assets in the future. Liabilities are debts that are owed to creditors. So I need to pay them in the future, okay? Like accounts payable, notes payable, salaries payable, anything I'm gonna pay in the future will be under liabilities. And the last part of my accounting equation will be owner's equity. The owner's claims to the assets of the business are called equity, also called owner's equity. Okay, so usually under equity we're gonna have 4 main accounts. Okay, so we have 2 accounts increase my equity, which is owner's capital or owner contributions and revenues. Okay, and 2 accounts decrease my equity, which is owner's withdrawals or dividends and expenses. I'm gonna explain them in the next slide. As we said in the previous slide, 4 accounts under equity. 2 of them increase my equity and 2 of them decrease my equity. So capital and revenues increase my equity, while withdrawals and expenses decrease my equity. Equity represents the amount of assets that are left over after the company has paid its liabilities. It is the company's net worth. It means if my company is liquidated, which means I filed bankruptcy, I need to pay my liabilities, so I need to sell my assets. So the money I'm gonna get from selling the assets, I'm gonna pay my debts, and the leftover will be my equity. Equity increases with owner contributions and revenues. Owner contributions to a business are referred to as owner's capital. An owner can contribute cash or other assets, such as equipment, to the business and receive capital. يعني إذا أنا بدي استثمر بشركة مو بالضرورة أنا أحط بس كاش، ممكن أجيب equipment، ممكن أعطيهم land، ممكن أعطيهم building. okay. Equity is also increased by revenues. Revenues are earnings that result from delivering goods or services to customers. إيرادات. Okay, so when you deliver your good and you sell your good and it's delivered to your customer, you need to generate revenue. When you provide a service to the customer, also you are generating revenues. So those increase your equity. Equity decreases with expenses and owner withdrawals. Expenses are the cost of selling goods or services. Expenses are the opposite of revenues and therefore decrease equity. Expenses like salaries, like rent expense, like utilities expense. Utilities يعني المي والكهرباء. So all of these are expenses, are costs. So will decrease your equity. And last item, which is owner's withdrawals, are also called drawings, are payments of equity, usually of cash, to the owner. Withdrawals can be paid in the form of cash or other assets and are not expenses. Owner withdrawals are the opposite of owner contributions and therefore decrease equity. Okay, so the owner is withdrawing cash from the business to buy something for the personal use, which means I am the owner of a company. I need cash, so I withdraw money from the business account. Okay, I'm gonna buy a car, I'm gonna use it for the personal use, I'm not gonna use it for delivery, for example. So the accounting equation is expanded to show the components of equity. As you can see, assets equals liabilities plus equity. Equity can be broken out into 4 components shown in the expanded accounting equation. So as you can see, under equity you have capital less withdrawals plus revenues less expenses. Businesses strive for net income. When revenues are greater than expenses, the result of operations is a profit or net income. يعني عملنا أرباح. إيراداتنا كانت أكتر من مصاريفنا. While when expenses are greater than revenues, the result is a net loss. So خسارة. عندي net loss. خسارة. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.